We're joined today by Leith Van Onselen, who is the Chief Economist at Macro Business. Leith, welcome to the program.
Hi, Amanda. Thanks for having me.
Good. Now, who was the star of the movie As Good As It Gets?
By memory, it was Jack Nicholson.
Jack Nicholson. I'm in love with that man, and it was a great movie, wasn't it?
Yeah, it was. Very cynical.
Cynical, and he comes out of the psychiatrist's office, or he's in the waiting room anyway, and looks at the others and says, this could be as good as it gets. Now, that's, in a sense, the title of an article you've written about the Australian economy, and that's what drew my attention to it. So, is this as good as it gets?
Well, yeah, I think it really is. Australia's had a bit of a dream run, at least over the past 10 years. In 2003, we commenced the biggest commodity boom in this country's history. And what effectively happened was the price of the major exports that we sell, so iron ore, coal, gold, natural gas, went through the roof on the back of the China economy boom.
Sure.
And what that effectively did was it created a hell of a lot of wealth in this country, because suddenly the goods that we sold overseas skyrocketed in value. So just to give you a rough example, whereas in 2003 it might have cost, say, 20 tonnes of iron ore to buy a TV from China, suddenly it costs, say, 4 tonnes of iron ore to buy a TV from China. So effectively Australia's incomes rose dramatically, well beyond what was justified by the growth in the overall economy. And this was actually borne out by some Treasury research that came out last year, which suggested that 50% of the income growth, so half of the growth in average incomes for every Australian, was on the back of the commodity boom.
50% of that?
No jokes. And so the problem going forward is that we've now got a situation where the commodity prices hit 140-year highs in late 2011, and they're now starting to fall. And as those commodity prices fall, we can expect to have a period where incomes grow by less than what the economy grows at. So It's going to be quite a drain on incomes, not just for Australians.
What do you mean a drain? You mean it's going to be ouch?
Yeah, well, basically, we're not going to experience income growth like we have in the past, whether before the commodity boom, when incomes grew roughly in line with the economy, or since the commodity boom, when they grow much faster than the economy. We're going to have a period where incomes grow at a very, very slow pace, if at all, as the commodity prices basically experience some mean reversion and move back to their long-run averages.
Sure. Now, in mining, a number of people say, oh, don't worry, there's a lot of investment in the pipeline, but we've seen a couple of them pull out. What do you think is going to happen with the capital expenditures in mining?
That is incredibly scary. Mining-related capital expenditure accounted for about 1% of the economy, so gross domestic product, in 2003 when the commodity boom kicked off. It's currently tracking around 7%, and it's doubled in just the past 2 years. And a lot of people think that mining only employs a couple % of the economy. It actually employs closer to 10% once you factor in construction workers, engineers, and all the other people who are associated with it. And what's happening is later on this year, the investment boom, which is, as I said, tracking at around 7%, is expected to peak and then decline, which means that as the projects that are currently underway roll off and get finished, we could be left with a big surplus of workers who suddenly don't have a job, as well as lower growth, etc. And that could potentially leave quite a big hole in the economy. And
can I say thank heavens, as a former immigration minister, for the 457 visa, because some of those workers would, of course, be able to go home.
That's right, and that is actually a blessing, having quite a few temporary workers involved in that kind of work, because it is very cyclical work that depends on the projects that are going on.
But the residual, we obviously do have a number of 457 workers and associated with mining, but we have a lot of people that aren't. They might be chefs, plumbers, sparkies, whatever. And with a downturn, they're all going to lose their jobs. Is this going to have a dramatic effect on unemployment?
It could. The Reserve Bank's hoping that they can engineer what they call a rebalancing, whereby effectively housing construction employs a lot of that surplus labour. They're not having much luck at the moment, and I don't think they will have much luck, purely because house prices and land prices in particular are already sky high, and they're actually beyond what a lot of Australians can afford or are willing to pay. So I don't think they're going to have as much luck as they're hoping, and that will probably lead to quite a big surplus of workers, so engineers, construction workers, and all the other type of workers that are involved in residual type activities.
Yeah. In the article that you wrote, you give a bit of a very positive run to a woman called Jessica Irvine, who put a post on the Business Spectator, And in that, she says that money's been funneled into people's pockets in the good times. You know, we've had the income tax cuts and stimulus checks and bonuses and household compo and on it goes. She says now they're going to have to take it all back.
Yeah, well, I think they will. Yeah, I'm not sure how they're going to do it. It's always difficult, and you've obviously worked in politics, and you know how hard it is to take the milk away from the baby once they've got the milk. But it wasn't just Australians who benefited from rising incomes from the commodity boom. It was also the government, which benefited from skyrocketing company taxes, and the state governments, particularly Western Australia and Queensland, which benefit from increasing mining royalties. Well, the company tax take's now shrinking on the back of the falling commodity prices.
That's no surprise, is it? I mean, I was surprised to see that people were surprised that with falling commodity prices, companies are making less profit.
That's right. And what we've got at the moment is it's not a bizarre situation, but it is unusual, where the nominal economy, so what that is, that's effectively the number of goods and services we produce and the price that we produce from that, is actually growing at less than what they call a real economy, which is just the quantity of goods and services. And the reason for that is because a large chunk of the goods that we produce are actually the exports, so effectively the commodities. And because those are falling in price, we've got a bizarre situation where the actual value of goods and services produced is growing at less than the quantity. And that has only happened a handful of times in the last 50 years. And that's happening right now. What it means is that the government's tax take is actually shrinking relative to what's the normal experience.
Yeah, fair enough. I've got a chart in front of me that Leith's reproduced, and it's got 5 bars on it from the 1960s, 70s, 80s, 90s and 2000s. The bar chart shows contributions to income, and the grey area shows what the terms of trade have done. In none of the other 4 decades, except for 2000, is it any more than, a few percent. It's quite small. But in this decade, it's huge, nearly half. So this is not a common occurrence for the terms of trade to be making this contribution to our incomes. And that's why it's so important. It's unusual. And if the terms of trade go cactus, we could be in deep doo-doo. Do you agree with that?
You summed that up beautifully.
Oh, thanks.
So what Amanda's just mentioned is that in the decade of the 2000s, the terms of trade chart went sharply positive, accounted for about 50% of incomes. If it was to go the other way this decade, it would subtract about 50% from average income growth.
So we'd be looking then desperately to make that up somehow, maybe with labour productivity, maybe with, I can't see foreign income flows making much of a difference. Doesn't look easy, does it?
No. In the long run, for any economy, the way they actually grow your incomes is through higher productivity and also higher labour force participation. Australia has been unusual in that we've had a great 10 years where the prices of the goods that we've sold have gone up in value immensely. But we can't rely on that to get us through in the future.
No.
And ultimately, for every economy, doesn't matter who you are, you have to drive higher productivity and also higher workforce participation to actually increase living standards.
Leith, the only disagreement I have, as I say, I love the little photo of the horrible scene where he puts that dog down the laundry chute, as good as it gets. But maybe you should have entitled it, it's going to get worse.
Yeah, I didn't want to be too negative though. There are some ways Australia can obviously be the masters of its own destiny, but it's not going to be easy. And no matter what happens or who's in government, this goes beyond politics, who's in government.
Sure.
We're going to have a pretty tough...
This is all of us. Doesn't matter how you vote.
That's right. And we're going to have a fairly tough decade purely because these strong tailwinds we've had are going to turn into headwinds as the commodity prices fall. And on top of that, we have an ageing population. The baby boomers retire, and that's going to potentially reduce the amount of workers to non-workers and increase the tax burden on the younger generations, and also make it more difficult for the government to raise tax revenue. So it doesn't matter who wins the election later on in the year, it's going to be tough for them, and it's going to be tough also at the state level. And I don't think it'd be a great time to be in government, quite honestly. It'd be a lot of hard work. Yeah,
well, government usually is. Leith, it's been a great pleasure. We hope to have you back again.
No problem, Amanda. Thanks for having me.
And Leith Van Enselen is the chief economist at Macro Business, and he also writes under the name of the Unconventional Economist. You're